Dear CQA Investment Committee, welcome to the presentation of UCSDgoTriton team. My name is Xiaolong. As the manager of our portfolio, let me introduce my team members first. We have 4 members in our group. Yuanxin plays as the researcher, while Yu and Yishuo are traders of our portfolio. We are going to display our investment in 4 stages: investment strategy, portfolio construction, performance and attribution, risk and return. Let me start with our investment strategy. Our strategy is to invest in stocks that are undervalued and try to get excess return from them. There are many scalars to quantify whether a stock is undervalued or overvalued. Commonly used scalars include price-to-earnings ratio and price-to-book ratio. We start off with these 2 ratios, screening companies that have lower PE and PB ratios than industry average. And then we introduce 2 more scalars, 30 days moving average and 14 days relative strength index. With all these indices, we make sure that the stocks we screen out and invest in have good profitability but are currently undervalued. Our investment strategy will be rebalanced every 2 weeks to remain on track.
We had 2 stages for our portfolio construction. First, during CQA competition first 2 rounds, we used the Bloomberg terminal to screen out the stocks we need to form out our portfolio. After a few weeks trading, we found that our short position was not doing well. As a result of an expansionary monetary policy, stock market experienced a steady increase in the second half of 2020, especially among sectors of technology, pharmaceutical, and renewable energy. Considering this circumstance, on the basis of our initial quantitative strategy, we add more boundaries to our screening process so that our short position contained more stocks with low beta and avoid the sectors of momentum. Especially, we modified our portfolio to contain some low-volume stocks. We expect that those stocks would neither increase nor decrease a lot, so that we would not lose or earn much money on short position and then focus on long position. Second, at the time we got into 3rd round, we were about 40% behind with the first rank, and the expectation of inflation started to rise. This is when we made our second adjustment. We changed our strategy aggressively since we had nothing to lose. We tried to long low-beta stocks and low elasticity industries such as retail stores, and short high-beta stocks and high elasticity industries such as high-tech, and then expect the market goes down. Take one example. High-tech companies such as Tesla, Xiaopeng was doing really well on the past few months. And we assume that the high-ranked team built position based on those stocks, so we took the upside position.
Now, I will introduce the portfolio performance part. Until March 30th, the total market value of our position is $1,582,050. The beta of our portfolio is close to 0. This is because we try to diversify our portfolio and eliminate the systematic risk. The Sharpe ratio of our portfolio is also close to 0. This is due to our risk-neutral strategy. However, as we made assumption that market will go down due to the COVID situation, we put a lot of short positions in market factors, which is positive trend right now, so our alpha and Sharpe ratio are negative. The percentage return of our portfolio is also negative. However, for the last few days of our competence, the market shows downtrend, So maybe in the foreseeable future, our portfolio will beat other team, and our portfolio is a good choice for investors who believe market will go down. So as shown on the slide, this is the 3 months return of our portfolio compared with SP 500. As you can see, from March 2021, we changed our strategy. We did opposite to the market as shown on the chart. Our return is almost negative correlate with market return. So next page, please. Looking at the 1 month return, the negative correlation is clear. So now moving to portfolio attribution. The main contributors by sector of our portfolio return are shown on the screen. The top contributor is industries sector. This part is tied to the economic situation. And other main contributors, the utilities, consumer discretionary, consumer staples, and the materials sectors. These reflect our later strategy. We long in sector less sensitive to economic situation and short stocks move with market.
Next, let's come to risk and return part. We can see from this graph that industrials, consumer discretionary, and utilities plays a role as positive return in our portfolio. In comparison, energy, healthcare, and financials gave negative contribution to our total portfolio. To be more specific, let's come to the next page. Our portfolio has a negative return at negative 6.83%, and we have a very high risk at 9.17% compared to the benchmark. It is largely attributed to a single factor still, as shown in the graph below. Next page, please. In breakdown and in detail, we can say from these graphs that we shift our investment styles in March 2020 because we believe that the market is already has a lot of bubbles, and as the central banks and the central bank increase the restriction on liquidity, the market is expected to fall, and these bubbles is expected to be burst. And in this situation, we increase our long position in value stocks in low beta and relatively safe assets with low PE ratio, and we turn to short growth stocks with high beta and high PE ratio like Tesla and NIO and Snowflakes. We can see from the volatility picture, picture of volatility, that our exposure decreased a lot in this stage, and the earnings yield increased a lot due to the fact that we shift our strategy. Next page, please. Our shift in strategy has achieved great success. As you can see that within a month, our Sharpe ratio increased from negative 2.67 to negative 0.96. And the absolute return increased by more than 5% within the late stage of the competition. It is largely due to the fact that the market turns as the same trend as what we expected, and the portfolio value also increased to 0.9 million. This is all of our presentation. Thank you so much.